What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. Pretty interesting day. Pulled down 4.56%. I want to go over some of the current data points and what big money was doing today. Before I get into any of that, make sure to hit that thumbs up and subscribe. I always greatly appreciate that. And with that said, let's get right to it. So SoFi did go down 4.56%. Very little volume, so 35.2 million shares were traded. 58.8 is the average. You can already tell by looking at the intraday, just a lot of this was algorithmic trading. So AI trading in among themselves. And plus you can kind of look at this does match that as well. So these are the transactions that did occur in the secondary market above $100,000. Does insinuate big money was not buying the dip today, as crazy as that sounds. But like I said in my video yesterday, if there was going to be a sign of weakness, you are going to see a significant pullback with SoFi because the technicals were overdone and they've been overdone for a little bit. Similarly, a lot of analysts came out over the weekend saying that the broader market's technicals did need to pull back and cool off. And so that's one of the attributing factors why the broader market pulled down today. So when it comes down to SoFi, there was no news, no SEC filings whatsoever today. So the last SEC filing was a 10K that was on February the 27th. Aside from that though, latest round of 13Fs are coming down the pipeline. So you do see Goldman Sachs did increase their calls by 84%. So that's different. So that's definitely a fairly good thing. The only negative is that they also did increase their puts by 164% quarter over quarter. Aside from that, you do see Vanguard increasing their position throughout their ETFs in SoFi. And overall, that is a good thing somewhat. I'll leave it up to you guys to make that determination because as it stands, or at least based on their last disclosure, Vanguard did have 81.28 million shares of SoFi, and that works out to be 8.32% of the float. So they do have a very big position. And so when it comes to Vanguard and BlackRock, a lot of people don't generally like them because they like to increase their position in a lot of volatile stocks just for the purposes of lending out shares. And coincidentally, Vanguard increasing their position over the last little bit is kind of matching with shorts increasing their position over the last little bit. So I don't know if there's some correlation or maybe just Vanguard is seeing value in SoFi. I have no idea. I don't think there's any way for us to disclose or find out if Vanguard is lending out their shares. It's just one of those things. Aside from that though, shorts did increase their position 620,000 shares today. 17.44% of the free float is being shorted, and that works out to be 158.28 million shares overall are being shorted. Cost to borrow average is 0.96%. And as well, utilization is 50.26. As I mentioned in my video yesterday, we are kind of following the same trend. So shorts are continuously increasing their position, similar to the SPAC level of SoFi. So it might be continuing to trend up to maybe around the 20 to 21% short interest. Maybe we'll just have to once again wait and see. You do see a lot of individuals starting to speculate, saying that it is around a 20% short interest and that it could result in a very good short squeeze. So a lot of people in the past, I feel like a couple of weeks, especially with a lot of good momentum, fear and greed index relatively high, a lot of people just throw the word around short squeeze just way too easily. I don't see SoFi ever being a short squeeze, just the numbers don't really add up. Utilization very low. Cost to borrow, it is extremely cheap, and oftentimes the cost to borrow minimum is negative. So I don't see that being a viable option. And even if SoFi was to squeeze, let's say to $30 to $40, there's some epic news that comes out and causes a very nice spike up. Can you guys logically tell me that you would buy SoFi at $30 or $40 right now? Institutions wouldn't. They definitely wouldn't. So I don't know about retail. I definitely wouldn't by any means. So that does mean it would be very short-lived. So even though it'd be a very sexy spike up, again, some people and majority individuals would sell out, causing the price to go down. So short squeezes are very sexy, very hard to come by, but when they do happen, it's very fun. I don't see it happening with SoFi by any means, but I think a lot of people just like to throw that around, and I honestly don't think that most of those people generally know what a short squeeze is or whatever. I could be wrong, but still, moving on from here though, looking at options. So $6.64 million in calls being purchased versus $2.2 million in puts. Sentiment wise, 46% of all the options options being done today were bearish, and looking at the call options that were purchased, there's a consensus for it to be around $9 by the end of this week. So the sentiment has gone down. Initially, the tail end of last week, there was some anticipation for it to be around $9.50, $10. So that has gone down a little bit. And looking at puts, there's a consensus for it to be sub $8.50. So that is interesting to note. And just looking at the open interest at the call options for this upcoming week, so expiry date on March the 8th, it is still essentially free and clear. So if the market does have a nice positive reversal, then SoFi, again, you don't see a lot of those constraints brought on by options. So kind of a positive thing, if that makes sense. So looking right here, so with it closing at $8.58, it is between this S1 and this pivot. So the pivot did break. So as it stands, $8.78 is going to be the next strong resistance, and then $8.39 will be the next strong support. So you'll want to watch both of those points for today, or I guess going into tomorrow and the rest of the week. But I feel like based on the futures already, it does look like there is more of a continuation going into tomorrow for a downtrend. So you might see this S1 potentially touched. And if this does break, then it might touch that 8.15. So let me know your thoughts on that in the comments below. As I mentioned in my video yesterday, looking at Stochastic, you do see a start of a deviation. So red line above the white showing a bearish sentiment. And plus, aside from that, it is at 86 or a little bit higher than that. So that is considered very overbought. So the first sign of weakness, you were going to see a very swift downtrend, and if it does continue, then especially more so if it breaks that 50-day moving average, then it is going to trend down back into the maybe high 7s or potentially 750 range. So let me know your thoughts on that. A number of retail investors have been getting out, it looks like ever since the 27th. And as it stands, it is still higher percentile of the boiling band, so there still is hope, just it will be all dependent on what does happen on a broader scale. And so even though I did say on a lot of different fronts there's some manipulation, the technicals are starting to break down, and the options not necessarily looking the best, I just want to play one quick minute of this video because it does talk on bigger picture. So even though a lot of analysts have come out and said, you know what, the technicals are overdone, over hot, and does need to consolidate, bigger picture, there still is a lot of hope for upside to continue. And in reality, a lot of analysts are starting to say it's not going to be the Magnificent Seven that's going to be carrying the market in 2024. It is going to be a lot of the kind of mid-cap stocks such as SoFi. So I think a lot of people will get a lot of good information out of this. So let me know your thoughts on this.
Stephanie Link is the Chief Investment Strategist and Portfolio Manager at Hightower. She's also, of course, a CNBC contributor. Steph, thank you so much for being here with us. Let's talk about whether or not this story needs to see broadening out, or whether it could be just like last year when the Mag 7 did all the heavy lifting.
Well, I hope it's not that last year, and I'm actually encouraged by what we've seen this year so far. We've had 16 of the last 18 weeks have been up. We haven't seen that, Dom, since 1971. I bet you weren't even born. So we are, though, seeing a difference in this year versus last year. This year, we are starting to see other parts of the market doing better. And it actually started in October, and then it continued in the beginning of the year, then it reversed. And then we saw Mag 7 again. So I think it's kind of healthy to see just this gradually happening. So it's not over for tech. Oh, my goodness, look at the semiconductors every day. They go up. But it's also other areas, like IWM was up 3% last week. Let's see if that continues. It's interesting. Crypto, also very interesting to me. Banks, and in general, financials, energy is doing well, industrials. And so I think a lot of that, though, is because we have seen better economic data, and the economically sensitive sectors should do well based on the better data. We're growing at about 3% in GDP. Consumption is about 3%. You're starting to see pockets of manufacturing do well from all the infrastructure spending. And so that you kind of add it all up, and it's good for earnings overall, not just for tech, but for all of these other sectors.
Steph.
So yeah, there you have it. So largely similar to what happened in December. That's what is anticipated. Once again, just a growth aspect, not necessarily just the Mag 7. So that could really help SoFi. Bigger picture, aside from this week, I think this week might be maybe consolidation and ultimately result in it either being negative, if not stagnant. but hopefully I'm wrong and maybe it just reverses to $10. I don't know. Let me know your thoughts. Don't forget to hit that thumbs up and subscribe. Give yourself a shout out. Did you buy today? Did you sell? What did you do with SoFi? Don't forget to hit that thumbs up. And with that, appreciate all of you watching.